Alright, good morning then folks. We head into European trade on Thursday the 23rd of November. Now we'll have a flick across markets and see what is going on and what is likely to be somewhat troubling end to the week for traders. Holiday thins trading after date, the slowest dollar decline, but holiday. It is Thanksgiving in the US, so US stock markets and bond markets are shut today. You come around to tomorrow, then bond markets shut early, stock markets shut early. The stock market closes at 1 p.m. tomorrow, New York time. Bond market closes at 2 p.m. tomorrow, New York time, which our time is 6 and 7 in the evening. So likely to be somewhat tricky trading conditions today. You've got a lack of volume, lack of liquidity, whatever way you want to put it, in today's session. And then into tomorrow, you'd have to imagine there will be a chunk of people who probably will take tomorrow off in the US. So again, volumes are due to be light and thin. The people that are there, they will be shutting up shop early for the weekend. So a tricky trade to come, you'd have to imagine, over the next couple of days. Apart from that, Asia stocks hold gains as confidence grows on rate outlook. Markets seem to believe that interest rates globally will come lower next year. I personally share that opinion. How much which countries' interest rates come lower by is a different question, but not really for this morning, I don't think. This morning bid watching with the ECB give it. I got some minutes from the ECB a little bit later on today, 12:30 I believe it is. That is likely to give us some sort of a clue. I say likely to give us, it may give us some sort of a clue as to how the ECB view monetary policy going forward. Do they reaffirm a stance that they are done with their interest rate hikes? Do they mention anything about next year? They will probably go down the route of higher for longer, but I still do think that the ECB are probably maybe the closest central bank to cutting interest rates. Not to cut soon, but 6 months into next year. If I was a betting man, which I am, I would probably back them to be the first potentially to cut interest rates, as their economy not performing too well at the moment, and with the Russian-Ukraine situation from a couple of years ago. It's mad. That's it's nearly a couple of years ago. It'll be a couple of years ago in end of February. It's mental, isn't it? But with that kicking off a couple of years ago, they've had to obviously reroute their gas supplies, which is obviously how you heat your houses across Europe, and that is probably going to cause some difficulties over the course of the winter. Not quite yet. It's only November. It's wait till January, February, March for that to potentially take effect. Australian dollar supported by hawkish bullock, hawkish comments from its central bank chief, while bonds took a dive, yields higher as markets move to lengthen the odds of a further rise in local interest rates. So the new central bank governor, Michelle Bullock, talking up the prospect of interest rates. They talked it up prior, hiked interest rates. In the minutes they said there's one or two more hikes, and at their last meeting they were like unsure. They're kind of central banks are a bit like, it's like points corners, one up, one down, one up, one down. But the last minutes did suggest one or two more interest rates may be appropriate. Michelle Bullock coming out and reaffirming that stance overnight. Apart from that, we have a flick around to see what's up, what's down. You can see bond markets are just completely shut. All these are white. They will not be back open until tomorrow. Futures are running, but just because futures are running doesn't mean you get much price movement. So you technically can trade the S&P 500 if you want. Not like cash markets when they come around later on, but they're up slightly. But I'm not going to read too much into that. European equities up slightly, but I'm not going to read too much into that. Asia Pacific stocks up, obviously in line with what we were talking about. You expect the other two to kind of follow suit, but that's not what we've got. Oil slightly lower. You had a build yesterday on inventories, a massive big build. And we were saying to students yesterday, obviously a build in oil inventories is negative for the price of oil. It's increasing supply. But if that build prompts a response from OPEC that they are going to cut production, then markets will not care about the build in oil inventories. They will care about the cut in production from OPEC. Prices rally, which is what we saw yesterday. And there was a report overnight that OPEC are not going to cut by as much as markets first thought. It sells off a little bit, but they still are likely to cut production on Sunday, and probably keeps oil somewhat supported. over over the next few days, or next couple of days, you'd imagine. Bond yields mixed globally. US dollar is lower across the board, not by a massive amount, but in the Asian session today it is lower across the board. Aussie and your Kiwi. Aussie up for reasons that we have already suggested to. Kiwi up in line with your Aussie. Rest of FX not doing too much at all. You can see a bit of US dollar weakness where your Aussie, Kiwi, Euro and Sterling popping higher. It's just a rally being sold on the dollar, which for me personally is to be expected. I've been talking about it this week, last week as well. Probably selling rallies on the dollar is the way to go going forward. Certainly on Monday's video, you're saying sell rallies on the dollar. It sold off on Monday. I then had a pullback Tuesday, Wednesday. It didn't work, but and overnight tonight, 4 o'clock yesterday, 3 o'clock yesterday, it started to take a turn lower. Dollar Swiss, dollar CAD, both lower as well. Dollar yen a little bit higher until those durable goods orders from yesterday, and then a bit of a pullback, and you can see those durable goods orders yesterday minus 5.4%. So further deterioration in economic data from the US in yesterday's trade. 10-year, 2-year yield in the US obviously shut. Gold not doing too much. I mean, it was higher, now it's back lower. We're looking at students, maybe a potential short off the resistance up at 2,000, but I don't exactly say that with much conviction. I'll probably steer clear of oil for the rest of the week, or gold, should I say, for the rest of the week. To be perfectly honest with you, oil, we've already spoke about oil. In the equity markets growing higher. We were looking at this level earlier on in the week, which, I mean, respected it pretty perfectly there, which is great. Popped higher off the back of that. Reached up 45.70, but stocks globally, there's a bit of positivity still in stocks. You can see the S&P, the Dow, the Nasdaq, the Russell, the DAX, the Euro stocks all grinding higher. The FTSE just in a world of its own at the moment. A bit of a contraction of volatility, if you're that way inclined. A bit of a symmetrical triangle there if you're into that sort of stuff. Apart from that though, markets, stock markets grinding higher, US dollar grinding lower, oil bit all over the place, extreme levels of volatility down and then back up and then just a bit sideways after that. But upside in equities, downside in the dollar at the moment, which is what we called at the start of the week, is taking effect now. PMIs throughout Europe, PMIs in Germany, I think the main one here is the manufacturing PMI out of Germany, consensus 41.2, previous 40.8, and if you look at this, you can see the way that's moving. From July into August, September, October, right, it continues to rise, and if that does beat previous and comes in above previous, again it's continuing to rise, which is improving sentiment across the manufacturing sector in Germany. If you have a look at this in Europe, hasn't quite followed suit throughout the rest of Europe, but with Germany being the largest economy in Europe, obviously it has a large contributing factor to the European prices. So let's see how this German one comes out. That beats previous, which is consensus is for it to beat previous. That beats previous. Just improving sentiment throughout Europe, innit? Then ECB minutes 12:30, and no economic data out of the US at any point over the course of today. You've a little bit tomorrow afternoon, but markets will be closed. They will not be closed because I'm thinking of New York time being UK time. But a little bit of data out tomorrow from the US, but not today. Thanksgiving in the US today, Black Friday tomorrow, tin trade for the rest of the week. So stocks are higher, the dollar is lower as we head into European trade today. Probably looks set to continue. Does it continue at any sort of an aggressive pace? Probably not. As I said, holiday in the US today, holiday in the US tomorrow, half a holiday in the US tomorrow. So if you are American, happy Thanksgiving, enjoy your weekend, and anybody over this side of the world, best of luck trading for the rest of the day.